Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I was going to start off by looking at SPX. And there's several things that come to mind when I look at this chart. It's like, well, some days you're the dog and some days you are the hydrant, but be that as it may, that's trading in a nutshell. And the reality of this is that this was a stronger move than what I was looking for. So the positions that I had around 2100 for today's expiration did not work out. I don't think that idea is completely over. We've got the and I'm not going to be jumping out here calling this a double top, but at the very least, it is still holding the resistance from 2132, and I'd like to see it pull back next week. When you come out and you look at these, and the biggest thing, one of the huge things in trading, is that if you have one series that doesn't work out, do not give up on the idea. As I come out and look at these 2100 options, you've got 38,000 open here, you've got 39 that are open here, and 65 that are open here. So if you're going to try and call this a pin or something to the similar, which strike would you look at? I still think the 2100 has a decent potential to pull back into it. Why would I not call the 2150 your pinning strike? Because you've got huge open interest here, but not really very much at all on the put side. To me, that just says you have a vested interest in the 2150 calls expiring worthless, and not so much sentiment around the put side. To take this a bit further, you could also say, around here at 2075, here's where you have a good chunk of open interest on the puts. So the true trade here, if you wanted to be, if you're willing to take unlimited risk, it would be the 2075, 2150 short strangle, and I think that's the best way to play that IV. Now, if you don't want to do that, that's when you come back to the strategies that I've been sharing, and I think we definitely still have the potential to get back down into those strikes. So that's how it worked out today. Obviously next week is a brand new week and I will continue to apply those strategies. That one, as I said, didn't work out perfect today, but sometimes you just take the good with the bad, and while that wasn't perfect for me, it is worth revisiting ATVI, which this is one of the most powerful patterns I think I could ever show someone, provided Thinkorswim will let me. But what I wanted to show you here, and why I think it's so powerful, is because you see everybody that was looking at this trend line, seeing there's a very clear 1, 2, 3 tests of the level and a very clear break of it. I think this is just one of the most elementary ways to start getting short in this, and the way to try to improve your work. And what I was trying to show you guys when it was happening is instead recognize the symmetry in this move. Because the break of the trend line is what gets everyone bearish, but if you're sitting here recognizing that you're still in a bullish trend because of symmetry and because of your broad moving averages, well then it can give you a really great opportunity. So that one worked out a lot better. If nothing else, it's a good lesson to kind of put back in the back of your memory banks, and the next time you see it, you'll be thinking about a lot more than just the break of the trend line. So I hope you guys find that helpful. Enjoy your weekend, and we'll get started with this again on Monday.